companies, and today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, I just want to welcome everybody. If you're new, please type in first. Good morning, Raymond. This is my brief bio for those of you who are new. I think we have YouTube broadcast, so please click on subscribe button on YouTube. This is my brief bio. My background is technology. I was the CTO of several publicly traded companies, and I've been managing my own money for over 20 years. And we have a team of financial engineers that are building AI models, enhancing the models, providing signals on a daily basis, and then I look at these signals and trade them using stock and option strategies. So that's kind of a quick overview. Disclosures are important. If you're trading stock or options, I encourage you, and you're new to trading in general, I encourage you to visit the link on your screen, optionscreening.com, so you can understand the risk associated with trading stock or options. I'm not a financial advisor, not registered with FINRA nor SEC. You should not assume that the future tradings will be profitable, and you can always pause the screen if you need more time to read the disclosures. All right, before we jump into trading, pre-market routine is important. The economy of control, the idea there is a process, right, and there's an outcome. Initially, when we start trading, we only care about outcome, right? The process, we don't know the process. But as you learn and as you continue your journey as a trader, you realize process is important. What does the process to me mean? It's something repetitive, something you can document, something you can give to another trader, and they can just repeat it, right? They can repeat the trades, right? So that would be mechanical trading, right? How do you achieve that? Basically, you have to have a written down trading plan, and you have to have a journal. In a trading plan, you basically say that, I'm gonna only have, I'm gonna have cash, right? 30% of my portfolio in cash. So somebody can repeat that. Okay, I'm only gonna have 4 positions initially, and I'm not gonna risk 2.5% of account value, right? You also have a checklist, right? These are the rules, I'm going to wait 2 to 3 days to confirm trend change, right? I'm not going to break legs of the spread. I'm going to be short and long the market at the same time, right? With different proportions based on market conditions. I'm going to look for ABC patterns. Give myself more time if I'm trading options instead of May. May already expired. Instead of June, maybe it makes sense to push it to new trades to July. And more space, right? Maybe instead of a breakout level in S&P around 525, maybe it makes sense to use 50-day moving average around 515, right? And that would be the checklist, right? And so I encourage you to keep a journal. I encourage you to have this pre-market checklist. Very important before market opens, to walk the dog, do some push-ups, meditate, right? Kind of get in the right mindset, get your variable heart rate, correct. So all of these are extremely important part of that repeatable process. Just be self-aware, right? Try not to call the bottom. We spend a lot of time about strike price selection. Just document that in your rules. I use estimated move analysis. I use dealer positioning. So very important topic for option traders. And just, are you trading because you're bored? Are you trading because you're hungry? Or are you trading because you saw a signal? Okay, so that's trading plan. We do have one-on-one coaching program as well. So if you need more, kind of a custom plan, right? There's no such thing as universal trading plan. A lot of it depends on your risk tolerance level, right? Your journey as a trader, right? How much you're willing to risk, what are you willing to trade? So we do have these custom trading plans and kind of coaching program, one-on-one coaching program, if you are interested. Lately, it's been popular. People are giving back to the coaching, so it's good. It's all about 10-year yield, right? 10-year yield pulling back today, fighting for the 50-day moving average. That's bullish for the market, right? As long as the yield continues to post lower highs and lower lows, which is current expectation. Same thing with the dollar. Market will probably continue to rally. QQQ was leading the market yesterday. It's pre-market down 30 basis points. Spider pre-market down maybe 10 basis points. All right. So for today, For today, model predicted. Let's look at the model. So it runs every night, right? The model runs every night, neural network, and basically says, based on the price action, what is the trend? We are in positive bullish trend. Everybody would probably agree with that. And it sees continuation of higher highs and higher lows, right? Today, 530 by 535, and continue to go. So the uptrend, it has not been broken, right? It has not been broken. So for now, one can expect higher highs and higher lows. Potentially wait for pre-market. We're slightly down, but 530 is where you want to buy. 535 is where you want to trim the position. Usually I wait 15 minutes to confirm that, right? To see if there's any news that can potentially drive pre-market activity. We have several Fed speakers. I don't know how much they can push the market. Raphael Bostic is more hawkish. So we'll see. But that's Tuesday night. Today, Christopher Wallers already spoke, right, 9 a.m. And then we have John Williams. I'm not sure if it's going to drive the market significantly, so we'll see. So to determine, let's look at 1 hour. To determine 2.5% stop loss, right? The model basically says 530, right? I mean, I would use maybe 528, right? So if you're doing day trading, since yesterday 1230 is your support, I mean, I usually would be more conservative 525. So I would put one. We can try to close the gap. So I would use this breakout level as your support number 1, right? So 5 points to the downside. If this level doesn't hold, then the breakout of the 50-day moving average, which is around 516, right? The gap, 512, right? So somewhere around here is your support number 2. So here my stop loss is 5 points, 1%. VIX is very low. I don't expect more than 1% move until maybe tomorrow after NVIDIA earnings, which is tomorrow after the close. But outside of the news with VIX 12, you can expect more than 1% move in spiders on daily basis, less than 1%. A little bit longer, 515, then I would use 15 points maybe. If you're thinking about days and weeks, right? Days and weeks, I would use 15 points. Around 516, I think is this gap is a this is a long-term support, right? Because it's a breakout level to all-time highs. So, and then 2.5%, right? Average account is $10,000. If you're doing day trading, average account is $25,000. For day trading, you want to risk less than 1%. That's kind of an average. That's the consensus. So that would be, $250 on $25,000 portfolio. If you're holding it overnight and you have average account is $10,000, 2.5%, also $250. And that's what I would document in a journal, right? I would put this is when I do if I'm medium-term trader, and if I'm day trading, I do maybe 50 shares, 250 divided by 5, and if I'm holding position overnight, I'm taking 250 divided by 15 shares. Right? Any questions on trading plan and support and resistance levels? All right, with the model runs, let's see for today. It gives you consensus kind of which sectors are leading. BIIB, right, Biogen, strong uptrend. So that would be one candidate. It kind of broke through this March overhead resistance, right? You have a gap, strong earnings, so you have a clear support and potentially continuation. It is down pre-market, so I would wait 15 minutes. And it's a volatile stock, so you have to be careful. You would only trade it if you like volatile stocks. Mark, Cherry Blossom, how are you guys? All right. Any questions so far? Duke utilities have been in strong uptrend, right? So maybe add Duke. We'll watch Duke. Right, kind of continuation, 2024 high, continues to grind higher, so that's good candidate. Micron, Netflix, Texas Instrument, right? So Netflix and Texas Instrument. And Texas Instrument. Right, yesterday, I think Jeff or Robert, I forgot who asked about Netflix. I said, you know, we were here. There's a lot of overhead resistance. You probably want to wait for a breakout. But as soon as I said that, you know, it actually was up 3%. So it could be a candidate too if, you know, this breakout is confirmed. If the breakout is confirmed, then, you know, it's a higher highs and higher lows. So it just shows you that even if the earnings were, you know, negative reaction, bulls are stepping in, right? An expectation that NVIDIA might have something similar, right? It's either slightly down, slightly higher, but, you know, eventually bulls will step in. So Netflix, Texas Instrument, Duke. I did do Macy's, so you can find these trades under Aggressive Power Trader on Tradespoon. You can find them under Active Trader, right? People ask the difference between Tradespoon and Yellowtown. Yellowtown, you just, as you see, there's more signals. So some people like more signals, some people like less signals. So that's Active Trader. You can find this here. By the way, I do have to. I have to leave early a little bit today at 9 o'clock. So please, if you do have any questions, enter them now, so I know if there's any questions. And by 9 o'clock, I have to leave. So Macy's, I did iron condor, right? The question position yesterday, it was a put skew, right? For the most part, it was a put skew. Put skew meaning people were buying puts and selling puts. You can find it. Let's see. Let's look at team. Oops. Not team. Let's look at trade hawk. So Macy's is flat. So look at position in Macy's. And Macy's. So the question is, do you want to be long volatility or short volatility? If you have a large call skew, right, where you have a lot of people buying calls and selling puts, then you don't want to be short volatility, right? Because if you have, especially a company like NVIDIA, right, where you could have significant move to the upside or to the downside. We've seen that with Starbucks, right? We've seen it with Taiwan Semiconductor. We've seen it with Netflix, Meta. You have these two standard deviation moves. But when you're positioning where most people are either buying puts or selling calls, right? Buying puts and selling calls, this is kind of a standard not standard, but that's when people are hedging, right? People are hedging. So if it's well hedged, then you know that even if you have positive surprise, you're not going to have, it'll be hard to get the outsized move. I think there was, so there was no really negative data, right? No negative data and volatility imbalance. The meaning people are buying, hedges. People buying hedges. So selling volatility, that's that was the trade. So I sold 16.5 put, 14.5 put, 22 and 24. So let's see, initial reaction on Macy's is positive, right? It's up 2%. So there was a lot of premium in these options. So let me try to close it and try to take a profit. So Macy's, call. See if I can close the call for 22. Debit of 2 cents. It's trading at 5 cents right now, so it's trading at 5 cents. But it's still quite away from the, you can find it under earnings power trader. So I'm trying to close the spread for 2 cents. So I sold the put spread, right, collecting the credit, right? This is a credit of 6 cents. I sold the call spread, right, collecting a credit, right? So it's considered to be market neutral strategy, right? Let's look at IM under profit and loss image. All right, so it looks like this, right? So as long as it stays between the strikes that you have selected, the short strikes, then you're making money. If it goes beyond the short strikes, right, to the left or to the right, then you're losing money, right? So it's right positive data, and that means that most likely the strike price will act as a kind of limits to how far can the market go, and that's and it will help you with the strike price selection, right? You can see there was large demand at 21, large demand on 22. Even in 24, but that's June contract. In the first 2 weeks, most of the concentrated at 22, right? So probably not going to jump above 22 level. So that's from the trade today. Outlook for Microsoft. Close before NVIDIA earnings. Before close. Outlook for Microsoft close before NVIDIA earnings. Let's look. So question Microsoft. Well, NVIDIA earnings is tomorrow, close. So we have what, today and tomorrow, right? We have today and tomorrow. It shows strong uptrend. 419 is support. It makes sense, right? 420 is your support. We did have a rally. Continues to grind higher, right? We have time to manage it today, tomorrow. For now, it's in bullish uptrend, right? It continues to be in bullish uptrend. In terms of neural network, in terms of positioning for today and tomorrow, I would use that weekly expiration, which is this Friday. It doesn't have daily contracts. But for today, you do have first overhead resistance is at 430. Right, so there's really no selling of the calls until 430, right? So this bullish momentum, yields dropping, it's conceivable that between today and tomorrow we'll get to all-time high, right? So Microsoft is on its way to get to all-time high. Thank you for your question. Robert, so look at all 3 active option trades and all over above the entry point. So usually I wait 15 minutes, right? So let's say I don't have exposure to Netflix, I don't have exposure to Texas Instrument, and I want to be long going into NVIDIA earnings, right? So you wait 15 minutes, and even if you don't have if the question is, well, it's above, you know, what do you do if it's above? Very common question. Above your suggested entry price, right? Let's say I want to get into it. You could wait for suggested entry price. It looks like we're actually pulling back, right? We may or may not reach that level, but you have two choices. You wait for suggested low, or you wait for 15 minutes and see the stabilization, right? We did have a drop. It's kind of stabilizing. It's been 10 minutes, but it looks a little bit weaker. So you may or may not want to kind of enter the trade, right? Depends, you know, that you don't think it's pulling back. You know, you may or may not want to wait for the suggested entry price, which is on Netflix 617. 617. I mean, it's pretty big drop, so it might not reach that level, but you know, but that's the answer. You want to be consistent. So my usually idea is that, let's say I don't have exposure to any semiconductors, and I closed Microsoft position. So I want to get into a technology stock. Texas Instrument pullback, 623, 647, right? Oh, sorry, it's not Fox. Texas Instrument, 195, 199, right? So 195 or 199. So you do have a support at 195.41, right? Makes sense. So if it drops another $2, which would be 1%, or if it does pull back, you know, or if it does pull back and I own Texas Instrument, my goal on the $10,000, I'm going to hold it overnight. My goal is to not risk more than $100. So if I'm buying Texas Instrument at 197 and it drops 2 points, you know, then I can, you know, I don't want to be down more than $100, right? So, you know, 1% would be $2, right? 1% would be $2. Well, here it's $3. So divided by 100, so 30 shares, right? Maybe 30 shares I can buy. So I can do that. Trade stock, Texas Instruments, and I had option trade, right? So I can. Okay, so now I'm in Texas Instrument, right? And if it drops, let's say I'm going to hold it till tomorrow, and Thursday morning it's at 185. I'm down $100, and then I have to ask myself a question: what does the NVIDIA earnings look like? Does it make sense to hold the position? And, you know, a lot of people ask, so that would be my strategy, exit strategy. On the upside, usually I look for 0.5% profit, 1 to 0.5% profit. So sell half of the shares. I will look for 0.5% profit. So it's 198, maybe 190. Let's do the high, 199.10. So I'll do 199.10. That's yesterday's session high. And then maybe try to squeeze another 1%. Beyond this all-time high, maybe to 201, right? 201. Okay. So that would be the Texas Instrument trade, right? You can find them under orders. So I bought 187.89, exit 199.10, half a position, exited 201. And then on the downside, if it does drop to 185, then I need to kind of make a decision, right? Why? Right. So that would be my thought process on Texas Instrument, right? And you don't have to, I mean, the idea is not to trade all signals. The idea is to look at your portfolio and try to be diversified, right? Maybe you have some, if you don't have utilities, maybe you buy Duke. If you don't have, you know, communication sector, maybe you buy Netflix and Texas Instrument. All right, it's 8:45. I do have 15 minutes. Any questions? I want to make sure that I get a chance to answer any questions. Discord, I'll mark Cherry Blossom. Where's Rosser? Rosser is missing. All right, Larissa, Lona, Viva, Carol, Chuck, Claude, David, Ed, Haiju, Han, John, Lalit, Maria, Mark, Martin, Maurice, Patrick, Raymond, RJ, Robert, Ted, Terrence, Vansidar, and Bill. All right, thank you. RJ, Walmart or Costco? I do like Walmart. It had a strong earnings, right? If you want to pick stock, you usually know where the overhead resistance is. There's no overhead resistance. So as long as it's above 60, it's a buy, right? Walmart looks strong to me. The other one was Costco. I mean, same pattern, right? They look identical. Thank you, RJ, for the question. Any other questions? All right, let's look at yield. 10-year yield is pulling back. That's positive. Dollar is flat. Japanese yen has been in the news. It's kind of still weak, so far intervention does not work that great. That's something that's still should be on the radar. See what happens. QQQ is down. So you see rotation, right? We talked about that. Yesterday the value stocks were underperforming. Today QQQ and semiconductors are underperforming, and spiders was flat. Silver continues its kind of vertical move to the upside. It's at 29 level. Bitcoin, vertical move to the upside, all-time high. Copper or silver or cocoa, sugar, they're all rallying, right? All rallying. Sign of a concern, at some point it should get translated into higher PPI numbers. Maybe not this month, but maybe next month or next 2 months, but something to keep an eye on, that we're still kind of this significant move in even UNG, even the gas, in the commodities in general. All right, let's review the rest of the positions and see if we want to make any adjustments. Amazon. So I do have Amazon spread. It's an option. June, so I have to make a decision. Amazon kind of double top, right? Going to the NVIDIA earnings. I do have 175, 180 call. So as long as it's above 175, right, or 170, the time is on my side and there's a time decay. But you could clearly see it did break out, right? You do have that marginal breakout of all-time highs, but it's been struggling to break out. Obviously, very sensitive to NVIDIA earnings. NVIDIA earnings expectation is that they're going to have a strong earnings, but there's a high expectations, right? So far, I haven't seen any like last quarter. Every semiconductor made 2 standard deviation moves to the upside. I haven't seen a single one with 2 standard deviation to the upside. So my expectation, it's a 1 standard deviation move. We did the calculation yesterday. I think it's about 75 points. 75 points. You have a large position at 1,000. 75 points, 1 standard deviation move. If everything is nice and wonderful in their earnings and they guide higher, right? They beat on the bottom and top line. Then I think 1,000, right? 1,000. That's where most likely is going to get it. If it misses earnings, there's a large position at 820, which is 100 points to the downside. So still 1 standard deviation. So I would expect NVIDIA to be somewhere between 820 and 1,000 on Thursday. And there's a position it's not like last quarter, right? So you do have vol Q above 0.5 until at least in this front months, right? Then it kind of deteriorates, and you do have some call skew, right? You do have some people selling short puts. So that's a little sign of concern that these could act as a magnet. So if they miss on any numbers, it could quickly gravitate over these strikes, right? 820, 800, and beyond, because there's no, there's really no support. There's really no support. But we could quickly get to 820 or 800 if they miss on any numbers. Probably nobody expects that, right? Otherwise, people won't be selling these short puts in large quantities. But you don't see these large spikes in calls like last time, right? So people are less enthusiastic about 2 standard deviation move to the upside, right? Nobody expects 2 standard deviation to the upside, right? Which would be around 150 points. So that would be my thought process on NVIDIA and Amazon going into the earnings. FXI, I did trim FXI position last year, right? Kind of almost this. When did it peak last time? Yeah, it peaked in May, right? It kind of peaked in, I'm sorry, January. January. So it peaked January, then it just one way downstream. Now we are in May in a still strong uptrend, right? These considered to be very bullish price pattern, reversal of downtrend, until the trend changes, right? Maybe below this line. I would say it's still a buy. So I'm long FXI. GameStop was a good example of, you have to be careful of meme stocks or in general these large moves to the upside. And when you do see a reversal, right? I usually look at 1 hour chart, and if you have in the beginning of the day it's at 62, and in the middle of the day it's at 45, that is a sign of gamma squeeze, right? Positioning, right? People were buying such a large quantities of calls, and when market makers see that momentum is deteriorating, they're just dumping the stock, right? They're dumping the stock because they have to hedge. They have to hedge. And let's see, I think GameStop is probably, let's see, do they still have a lot of demand for calls? Do they still have a lot of demand for calls? So a lot less, right? You can see 100, right? Still a relatively, not that big number, 800. But mostly it's 40. So still, it's the same thing, right? It's still kind of a negative, right? It's people are enthusiastic. Nobody's buying hedges. Nobody's selling calls. But you can see, actually, nobody thinks it's, well, I think 30. So people think it can get to 30 by end of next week. Okay. If it does get to 30, that would be actually a profitable trade. So we'll see. But for now, obviously, it's not. But this is an example where if you want to be long volatility, you want to trade with the crowd, right? Whether it's silver or GameStop or these high-flying stocks, you want to do kind of these long-short strategies, right? You can be long volatility, right? Debit strategy, but you can do debit spread. You can do collar. Condor. You can do condor. You can do butterfly. In this example, I did butterfly. All right, Goldman Sachs pullback. So it did pull back. Looks like it's recovering. So Goldman Sachs still long Goldman Sachs. We had Jamie Dimon yesterday indicating that potentially, he's at the end of his career and they're working on, succession plan. So all the financials got pulled back, but looks like they're recovering today. Let's see, JP Morgan. Similar price action. Okay, so still long Goldman Sachs, still long KRE. We talked about Macy's, so let's look at KRE. Same price pattern in all the financials, right? They're overbought. It makes sense that they pull back, going through some kind of consolidation. Silver. You have to look at the monthly chart. It looks like we're going to 32, 34. Right? It looks like we're going to 32, 34 on a large demand. Right? This is monthly chart. We're going back to 2011 high, right? 44, and 2013 high is around 33, 32. So still long silver. We talked about regional financial. We talked about Macy's, Wells Fargo, and XLE. I assume Wells Fargo is similar to other financial. I think it's doing a little bit better. So still in strong uptrend, 61 strike, 57.5 call. June, time decay, right? So I'm waiting, just like Amazon and Wells Fargo, I'm waiting for time decay. KRE, I have more time. That's July. And finally, XLE energy, right? Commodities, energies in general have been strong uptrend. It's kind of walking the 50-day moving average, but still pattern of higher highs, higher lows. Looks like 92 is a strong support for energy. So I don't expect it to break 92 anytime soon. So for now, I'm still holding the position. All right, it's 8:55. I do have 5 minutes left. Any questions on Discord? L. Mark, Cherry Blossom, appreciate your participation. Yellow Tunnel admin, thank you for joining. All right, I'll see you guys tomorrow morning. Between the strategy and more 715 or 3080, currently at 3250. Robert, on Netflix trade, why there is such a big difference between the strategy entry point prices 370 or 3080? Netflix. What are we talking about? Netflix. Oh, this big difference between entry points, 617 and 640, 33 points. The big difference because you have strategy A and B. Strategy A, if you see pre-market is down, right, 0.5%, right? If we had CPI data today, right, model doesn't know about CPI data, doesn't know about any news. So we basically give you two strategies. Strategy A, if you look at the pre-market futures and they're down for whatever reason, you probably want to wait at least 15 minutes and find the support. If the futures are not down, then just use yesterday's close at 640. So right now, Netflix is at 640. That's the entry one. You don't see spiders where spiders are kind of flat. So in theory, if you want to trade Netflix, you don't have to, right? I mean, you don't have to either way, but most likely it's not going to get to the 630 level or 617, right? Sorry, what is it? 617, right? And 617, that's the predicted low, right? So 617 comes from obviously Netflix had a strong move. So model basically sees potentially it could reach 617 level, especially if the pre-market futures are down. Pre-market futures are flat. At this point, I don't think, unless something happens in the market, big reversal, it's probably not going to drop 3%. Right? It rallied yesterday 3%, but today it doesn't look like it's going to drop. So you wait 15 minutes, just like I did on Netflix, and I did on Texas Instrument, and then you have a decision to make, right? Do you want to be long, or do you want to at least wait for breakout, right? Right now, there's not much room to the upside, right? You have it has to break above 643. So if it breaks above 643, okay, that's a buy. Until then, you probably want to wait till it at least pulls back to session low 635. Drop, give you like 1%. So that's how I would manage that trade. Any other questions? All right, I reviewed all the positions. Yield is down, that's positive. QQQ is recovering, almost flat. Spiders is almost flat. Small caps flat. I mean, everybody's waiting for tomorrow, right? There's not much going to happen until NVIDIA, right? Last May, when NVIDIA announced earnings, it was just kind of one-way trade, continue to go higher. A lot of people expect same results this time. So we'll see. Time will tell. We have till tomorrow to wait, but I would at least hedge some of your, especially high beta technology, AI stocks. If you have those positions, maybe Merit put, right? I like buying stock, buying put. You have stocks, sell calls against it, right? I don't think NVIDIA is going to move more than 2 standard deviations, so probably 1 standard deviation. So, if you sell that 1,000 strike, like majority of the people, then I think it makes sense against your stock position. If you have stock position, 100 shares. Not a lot of people can afford 100 shares in NVIDIA. But if you have like single call, I would sell a call spread, right? I wouldn't just keep a single call because they're too expensive. All right. Thank you very much. You guys have been awesome. Have a great day, and I will see you soon. Thank you. Thank you for participation.